Good afternoon, everyone. This is Nate G, and I'm going to do a video here on how I use both Thinkorswim and Tradingview to trade these snipers. Now, what you see on the screen at the moment is a sort of compressed view of what my setup looks like. Now, on one monitor, generally this is now you know being compressed into one monitor, but generally in one monitor I have my SPX sniper charts and all that with the VIX and the ticks over here on the right, and then I have the SPX chart up with the gamma exposure levels on it, and the sniper tool below it, and then hidden I have the Vold, right? Because you really only just need to kind of glance at the Vold and then hide it again. So what that does is that gives me, the ability to, see a little bit more detail in the SPX chart, right? And I also have in this one screen, I also have tabs open for the Mag 7, right? I have Amazon here, I have Apple, Google, etc. And those have the gamma exposure levels for the Mag 7 on that chart, which I'm gonna release here pretty soon, so that we can do 0 DTEs on the SPX, and then all the Mag 7s are one DTE to 0 DTE, depending on whether you're on a Monday, Wednesday, Friday, or a Tuesday, Thursday. Um, so what we have, the way I have this set up, I'm usually sitting here on a 1 to 2 minute chart, and I'm watching the market move. And what I then have set up over here are two active trader windows, right? Stacked one on top of the other. And if you notice the way I have these set up, I have the red number one in my top chart, right, as a link, and then I have the yellow number two as my bottom chart. And the way I can quickly get in and out of trades is if I go to my option chain here, right? So let's put up the option chain for the SPY. Okay. Calls sit on the left side and puts sit on the right side, right? And then the strikes here are 0 DTE, 1, 2, 3, right? These are everyday expiration options on the SPY. And then what you'll see here is the at the money, line for both calls and puts. Just gives you an idea of where that 50 to 55 delta option is. And I'm really only using 0 DTEs unless we're late in the day and I'll go to a 1 DTE, or if we're playing like today's a Tuesday and we're playing something like Google, then I'm playing a 1 DTE on Google, right? And I can see those here. So let's say, for instance, I wanted to find, I wanted to try and be able to find a trade that made some sense, and maybe try to take it live, with one or two options, just to kind of show you how this happens. But the SPX is pushing up here, breaking this high. And so there's not really a reversal area in which I can take something. Now I can kind of look around on like Google, Amazon. There's Google that I decided to cut right before I started recording. That's moving up. That would have been a nice trade. Cut that for just break even. So there isn't a trade setting up, but let's just say I thought that we were coming into an imaginary level, like let's say there was a gamma exposure level here at, 635, 68.35. And I thought, okay, we're going to get a reversal here. And I'm watching my sniper to see if we get a reversal down to the downside. And what I can do is change this over to, more of a standard reversal, but we're not in an oversold condition, overbought condition like we were over here. So in this case, I'm just going to look at my scalper, which is going to give me both sides. And I'm waiting to see if we can get a print on a turn right here. But let's just say I thought the SPY was going to reverse here to the downside, right? So my theory is that don't take this trade. This is an example, okay? Because I don't actually think that that's going to happen. I'm just trying to create a scenario. Ticks are up. Maybe for my imaginary scenario, I'll take a long because I think we might come up into this 68.50. So what I would do is I would grab this slightly in the money 682 call. And if I right click it, I can come down to this bottom section and it says send it to red or send it to yellow. I generally like to send calls to red, which is my top one. And then if I'm not sure what I'm going to do here, or I just want to be ready for anything, I'm going to grab the slightly in the money 683 put, and I'm going to send that to yellow. So now when I come back to my option chain here, I have calls up here, and I can verify that by looking right up here. Sometimes I grab the wrong thing, or sometimes it doesn't come through. And then I have the puts over here, right? And depending on what I want to do, I can take 10 of those, or I can take one of those. I can change the quantity just by moving this up and down. But I have these 1, 3, 5, 10, 20s just kind of as presets. So now that they're here, I can wait for this to come into a level, a sniper signal to start to print, and then I can take my trade. And the way I'm going to do that is I'm going to, because the spreads are 2 cents, I'm going to mark it in. Okay, so let's say I think this is rolling over. I've just marked it in to one contract of the SPY put on a rollover on this potential signal right here, right? Now the ticks have been up. We just kind of broke a new high. I don't necessarily think this is a great spot for this kind of a trade, because what usually happens, right, is we come up, we break a high, we come back and retest, and then we continue on our way back up, right? But we're not going to get a continuation up signal right here because we're kind of getting into this near overbought area, and so the only kind of signal we're going to get is a reversal to the downside. But now that I'm in that trade, I can manage that trade by putting a stop in if I wanted to. Let's say, down here, if I thought, okay, on this trade, I only want to risk, $20 or whatever, maybe that's it's probably not 10%, but it's pretty close. Let's say 10%. I could put a stop in there and then watch this thing come and take me out, right? Or if it starts going in the direction I want it to, right, I can put a break-even stop in and then start to move that stop up as it trails into profit, right? And so I can manage those trades here. And then let's say, and because this is only one contract, I'm not overly concerned that this is going to really go against me. But let's say I was playing a lot of contracts, and we're just about to break this high to the upside here. Then this would be, a break of this high would be how I would manage this as a stop out, right? So the other thing is I'm watching ticks come up here into highs again. So let's say this was, I don't know, like a Google or an Amazon, and it's not as strong today. But I look over and something else like, oh, Apple, that's stronger today. I could be playing puts here and calls in something else. So I would jump over and I would go, okay, I want to go to Apple. I'm going to grab the just one strike out of the money calls, right? Because it's a day away, so that's a 1 DTE. Apple's pushing up here, and so okay, I'm in Apple. Okay, so now I have two trades going. They don't necessarily have to be in opposite directions, but I can have multiple trades kind of going simultaneously if I'm playing, let's say, SPX on one and Apple on another, or vice versa. And so what'll happen, so we'll go back to the SPX that's starting to go our way. It never, or not starting to, it looks like it might kind of head our way a little bit. And it never broke that swing high, so there was never a need to stop out, right? But if this thing wants to roll a little bit, I was hoping it would roll just a touch more so I could show you how we would manage. There we go. Okay, so now you can see we're into profit here on just a little bit on that SPY trade. If we can get about 10%, I'm going to start to manage that by putting in a stop at break even, right? And then that just becomes basically a free trade, right? I'm not gonna lose money on it. It might come back and take me out, totally fine, right? So now I have a stop in here at break even, and I'm gonna let this thing start to do what it does, right? If this thing continues to roll over further, right, I might slide this up to, maybe that 10% level. But that's how I'm gonna manage these trades as they're happening live, and I can see them on my other screen. Normally, this screen is big, and this one sits right next to it, and there's a line right here where the monitor, the two monitors are split. So this could reverse. I mean, SPY's been strong. I would expect it probably does. We're way above VWAP, so most things are going to continue to move up. But right now I'm protected, right? I could take this off at, I don't know, 7 or 8% or whatever it's at right now. Or I could just leave it protected for a little while and see if we get a larger pullback, maybe into, this sort of a trend line area. Right? And then I'm also going back and forth and I'm looking, okay, what's Apple doing? Well, Apple's kind of turning around. So what I expect to happen here is maybe Apple to push up and this SPY trade to take me out at break even. That's what I think the market will do. I just took this small rollover to just show how that trade is done. You can see we got the trigger there, and then we got a confirmation on 2 candles later. See, just took me out. So that was a free trade, no harm, no foul, right? And this could end up working its way back up. Now my Apple trade, which is a long, is working. I'm not quite ready to put anything in at 0 DT, at break even, because I need to give it some more room. Otherwise, it's just going to come and wick me out, right? So now I'm currently managing this trade just manually, right? I'm standing here, I'm watching it. I'm watching what the name is doing. We got some nice volume in there. I think it wants to come up and get this 260, 250 gamma exposure level, right? So SPY trade was a break even. Nothing happened there. Now that we're pushing up here, I'm going to put a stop in at break even. And I'm just going to let this thing work its way up a little more. I'm watching the ticks on another screen. They're not really doing a whole lot of anything, but I'm going to come in here and I'm going to move this up right? So now if it wicks down, it's still going to take me out at profit. I don't know, it's maybe close to 10% there. And as we start to come into that level that I'm going to want to take profits at, that call resistance level, right? I'm just going to kind of slide this up, because if it wants to keep going, I'm going to let it. But if it's going to reverse here, I want to make sure I take my profits, right? So then if I come over to my calculation, I have a little sheet that, because this doesn't tell me percentage, but we're in at what, 130? And this, if it takes me out here, will take me out at 156, right? So that was a quick 20% in as we came up into this absolute gamma call resistance level. So I had a break-even trade and a 20% trade. Does that make sense to everyone? And kind of how I do that? Are there any questions about that specifically? Right, and to be clear, the long there on Apple was not a sniper long. The sniper long was way back here, and we took it. It was way back here, right, at sort of this level. We took this little break, this kind of retest of the highs, and then a push up and through. But what I was trying to show was then how you can take trades, in Thinkorswim charting on Tradingview. And so, while that wasn't a sniper trade necessarily, or not necessarily, it wasn't a signal sniper trade. It just shows you how to manage the trades that you have going. And you can have multiple windows like this open. You can have 4 of these open if you wanted to. And I have it set to auto send, so if I click this, then it's gonna buy or sell. When you first set this up, it usually gives you the option. The default option is you click it, and then a window pops open and it says, "Are you sure you want to do this?" Which, if you're not familiar with how to execute trades in Thinkorswim, I do recommend leaving that on. Okay, that's a little description of how I do Thinkorswim and Tradingview in concert with each other, and I'll talk to everyone later.